In this video, we are going to get into all of your AMC stock specific data. We're going to look at the markets this week ahead, take a look at the calendar as well as the calendar for earnings. What earnings can we expect this week? Last week was the first week since 1997 that you did not have a single company with analyst estimates reporting on earnings. So last week, very slow week. This week is going to be a pretty fast-paced week, I would imagine. We do have some pretty big economic data coming out. The official start of earnings season does not start until next week. We start to get more banks, and then the week after that, more banks, and then towards the end of January, we'll get stocks like Tesla. We'll get some other larger names like a Netflix reporting earnings as well. So 2024 is going to start off with a bang, though, this week. Now, on top of that, we're going to go over what some analysts are saying about our markets and potentially where we need to be positioning our portfolios to benefit from this. So hit that like button and subscribe to the channel if you guys have not done so already. We'll try to keep this one short, sweet, straight to the point, give you the information you need and nothing you don't here in this video. So let's get started. First things first, let's run through AMC stock. And what's going on right now? AMC stock at $6.13 per share, trading still pretty close to a multi-year low. We did come off of 4 green days in a row. Majority of that was last week and the following Friday. Not last week, but the Friday before then. Although we were green on red. What the heck? Green. Oh my gosh, we were red on Friday. This last Friday, you were only down about 1.45%, getting back about 1/10% in after hours. So it's been pretty green for AMC recently, but just not that explosive. Last week was, I think, a pretty important week. We kind of got a gauge of how people were feeling, especially retail investors. And retail was relatively bullish on AMC. At least we did not hit new multi-year lows. But definitely the situation could get a whole lot better in the week ahead. We'll see. A lot of this depends on any specific news that comes out for AMC. I'm hoping to hear confirmation that we're not going to get further dilution for AMC. I think that could kickstart a larger rally for AMC, something we have not seen in a very long time. But as far as when that happens, who knows? But you should party like it's 1999 because the NASDAQ 100 soars 53.8% in 2023 for the best year since 1999. So yeah, 2023 was a pretty good year for the top 10 stocks in the markets. 2023 was a pretty poor year for your average stock, especially for small and mid cap stocks as well. They did not nearly post even close to 53.8% returns. Nonetheless, this upcoming year, small and mid cap stocks definitely where I want to be allocated in my portfolio. Let's take a look at the short data for AMC here on Ortex. We're going to get some new numbers here pretty soon, but this is where things currently stand. Legally speaking, I cannot quantify this. I cannot prove what I'm about to say next. I think these shorts, well, short interest of free flow is likely hundreds of percents sold short. I cannot quantify that. I cannot put that into anything that I can show you. That's just my personal belief. So come to your own beliefs and let me know what yours are down below in the comment section. Now, short interest percentage of free flow, 8.78%, $135 million worth of short positions currently in AMC stock. Days to cover 1.07, $21.72 million or million shares that are currently sold short. Shares out on loan 20.75 million, cost to borrow 1.14%, utilization of 29.9%, and a short score of 54 out of 100. You do have a cost to borrow average of 1.05%, cost to borrow max 8.6%, and a cost to borrow minimum of 0.82%. So yeah, you definitely have some pretty poor looking numbers over here. I will say that. Again, take those numbers with a big grain of salt though. As far as volume, we seen last Friday, 67.7% to the call side, 32.3% to the put side. Volume that we seen for this upcoming week, last week, if it will load. Oh, well, that's never a good thing to see on Ortex. Let's see. Let's see if we can make our way back to AMC slowly but surely. Look at the option activity for this upcoming week for January 5th. You do have open interest 64.44% to the call side, 35.56% to the put side. So looking pretty good there. Put to call ratio put to call ratio, roughly similar to the open interest put to call ratio as well at 0.51. So roughly about 2 times as many calls for every 1 put currently on the options chain. Now, for the past week, you have seen 12 orders totaling $778,000 in AMC stock from hedge funds and institutions with a positive order value of 87%. So numbers look pretty good on AMC for last week as far as hedge funds and institutions. Keep in mind, a lot of these money managers have been gone, not in the office over the past really 2 weeks or so. They tend to take this period off from, the week before Christmas to the start of the new trading year. So yeah, it was definitely a market that was left to retail investors by and large the last 2 weeks. So we'll see where things go. Technically, the Santa Claus rally does end on January 2nd as well. The typical Santa Claus rally, but we'll see. I think a lot of money is going to flow into markets in the first couple of weeks of 2024 as people are trying to catch up to where the markets are and to get fully allocated in really interest rate sensitive names, small mid-cap stocks, where a vast majority of the markets have been underweight for the past 2 years. That's just the bottom line to it. When there's $6.2 trillion currently sitting in money market funds, that potentially sets up those areas that I previously just mentioned, interest rate sensitive, small mid-cap areas, to perform well. And that's what I'm expecting. Now, Tom Lee expects small caps could rally 50% over the next year, and that's in line with my estimates as well. I think it's going to be a really good year for small caps. Maybe higher than 50, maybe more than 50%, maybe a little bit less, but odds are it's going to be around that mark. Keep in mind, Tom Lee with Fundstrat was the only analyst that got the prediction correct for the S&P 500 for this year. Now, if we look at the Stonko Tracker data in the week ahead for AMC stock, keep in mind, on Friday of last week, you had 18,000 calls expire in the money, 84,000 calls expire out the money. In the money puts at 15,000, out the money puts at 28,000. So some option activity last week. This upcoming week is probably going to see more option activity hit the option chain as well, as a lot of these options do get rolled over to the next week. So you do have currently calls in the money of 6,700 for this upcoming week, 44,000 calls currently out the money, 10,000 puts out, 10,000 puts in the money, and 17,000 puts that are out of the money. So definitely could see, this week get more option activity, but already starting with a decent little amount. Now, let's take a look at the earnings calendar, and really not too much. Some of you guys might know some of these companies. They're not going to be important for the markets at all, but you do have Walgreens Thursday pre-market. You do have Conagra Brands Thursday pre-market as well. And then Friday after hours or pre-market, you have Constellation Brands. So these three are really the only ones that I think anyone's going to pay attention to. A lot of these other names are just not really well-known names. Call-Main Foods as well. That is Wednesday after hours. That one could, again, be important. We want to see how inflation is in food. I think that's the big question will get answered with Conagra and Cane Foods. And then Constellation Brands, that's more, alcohol. That's kind of a non-necessity, right? So we want to see how some of those numbers look as well. So that's what we have there. For the calendar ahead, we'll start on Tuesday. Markets will not be open for trading coming tomorrow. Let me know what your guys' plans are for 2024. If you have any New Year's resolutions or, what your investing resolution looks like for 2024, let me know down below in the comment section. But really nothing for Tuesday. You do have construction spending, some bond auctions, but nothing too crazy there. Wednesday, you have ISM manufacturing PMI and JOLTS job openings coming out at 10 o'clock in the morning, and then the FOMC minutes at 2 p.m. On Thursday, you are going to get Challenger job cuts, expecting that to spike quite a bit, and the ADP employment change, those coming out in between 7:30 and 8:30 in the morning. And then you will have continuing jobless claims, initial jobless claims, S&P Global Composite PMI data, bunch of oil rig data, and that is pretty much it for your day on Thursday. Friday is going to be the big day. Friday is when you are going to get the non-farm payroll report for December, expecting quite a slowdown to 163,000 job ads. We'll see where that number comes out. Really stronger, the better here. We want to see the economy holding up. If non-farms comes in low, then that's going to mean, well, yeah, maybe a recession is coming after all. ISM Services PMI expected to come in pretty much unchanged from last month at 52.6. Some estimates have 52.8. Last month was 52.7. So that will also be another important one coming out. But yeah, your big data is definitely going to be the non-farm payroll report on Friday. And really, it comes down to the implications of a recession. If that number is bad, then a recession looks more likely. If that number is good, then a recession looks a little bit less likely. So definitely keep that in mind. Now, Ryan Dietrich says, thanks to the 24.2% gain for the S&P 500 in 2023, here's a stat that amazes me. Since 1950, stocks have been lowered 21 times. They have also gained 20% or more 21 times. So in other words, it is as likely to have a down year as it is to gain another 20%. So you could either have a sideways market or you could have a another big year. Now, the king of charts shared this. It says, dumb money confidence in the rally, basically showing a similar formation that you've seen back here in the July topping of our markets during the summertime AI rally. Now, he says, well, I called the day of the July top, the day of the October bottom, and predicted this rally. I will flip back to bearish soon because a major top is forming. The herd is confident the rally will continue. Dumb money is forming negative divergences like the July top. Now, I said most likely indexes fall, then trade sideways. Why? Because Magnificent 7 controls the weighting, and they are beyond fully valued in most cases. You can likely see the broad markets rally as the indexes start to decline as capital chases interest rate sensitive names and sells Magnificent 7. It's clear to see, and it's very clear to see in my personal opinion, what controls the S&P, the NASDAQ, the ETFs, the major index weightings. Magnificent 7. Well, who is fully valued and richly valued right now? Magnificent 7. Who benefits from rates going lower? Not Magnificent 7. They actually get hurt because their cash is going to yield them less. Instead of making billions of basically free profit on their cash, that's no longer going to be as much the case. Who benefits? Small mid-cap stocks like an AMC, stocks that, could benefit from refinancing. Those are the names that benefit. Those are the names that you would want to be invested in for 2024. So if Magnificent 7 was getting sold and they are 30 to 40% of the SPY or QQQ weightings, well, if those stocks sell, 7 stocks, 10 stocks could dictate what happens to the indexes, whereas thousands of other stocks could rally and have virtually no effect on the broader indexes, the S&P 500 or the triple Qs, right? You could literally see the NASDAQ 100, the triple Qs, selling down because of the top 10 names in that ETF. And you could have the rest of the NASDAQ itself actually doing great, and it wouldn't be reflected in the triple Qs. Same thing with the S&P 500. You could have the top 500 stocks, the top 490 stocks doing good or okay at least, and you could have a big sell-off in the top 10 out of 500, and the index would still go down because of the weighting in, Magnificent 7 names. So I think it's pretty clear that the markets are probably going to come down here. They're probably going to trade sideways here, but your other names likely rally big time in 2024. And this could start pretty soon. I think you really don't want to be in those Magnificent 7 names for 2024. So yeah, let me know what you guys think about that down below in the comment section, guys. Ryan Dietrich also says here, since 1950, the S&P 500 is up 9.3% on average. But when it comes to investing, average isn't so average. Only 4 times has it gained between 8 to 10%. That is 4 out of 74 years you can expect to see an average return. Remember that when you see calls for about 10% gains in 2024. So usually it's, not average. The low years are really compensated by the really high years, and the really low years are compensated by the average or the very good years. So next year probably isn't going to be the average that Wall Street is calling for, about 10% of a rally in the markets. Let me know what you guys think about all this information down below in the comment section. Where do you stand with AMC stock in your portfolios? What are you buying right now? Are you diversifying? Are you going all in on AMC? Are you going all in on calls? Let me know what you think and what you are doing down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.